Okay, hello guys, and welcome to this price ladder analysis video. I'm going to be going through a very short and sweet price action example that we saw in the Euro Stoxx 50. So just to outline what we're doing today, price ladder analysis as we do every Tuesday. And effectively what we're going to be going through is the Euro Stoxx EU 50 futures, and the date is the 8th of the 1st 2016. So the date we're actually looking at, it's not currently the date. The date today is actually the 19th of January. We're going to be looking at how they traded on the open. So this is going to be the open of that day. So the futures open specifically. So that's going to be the futures open is between 7 a.m. and 8 a.m. Sometime in that period, we're going to be taking a look at a little price action snippet. So let's get right into it before, well, let's just get right into it effectively. So just bear with me while I start this up. We can see we're pointing at this price ladder in here. As you can see, I'm just going to open up a little tool so that we can draw on the price ladder as well. So now we can effectively draw on the price ladder. What are we looking for here? So we're currently trading 30.89s, right? We can see currently the high of the day is set in at, so the high of the day is currently set in at 30.92s, and the low of the day at 30.71s. So high of the day, as I just noted, 30.92s, low of the day, 30.71s. Now the first and foremost thing, what sticks out to you like a sore thumb? Well, if you've been watching price ladders for quite a while, the first and foremost thing, especially in the futures session, when you've seen quite low bids and offers, so the average bid and offer is quite low, 200, 200, 370, 360, about 320, 300, 570, 700 here is sizable down here at 380s. But then if we just scroll up and take a look all the way up at 30.94s, there's an offer in at 14.50, which is pretty big, and it's sitting there. It's not flashing. It's showing us potentially that it could be paper. It could be a fund or someone big in the market that needs to execute an order. So the first and foremost thing we're going to do is, as we're watching this, we're going to look to front run that. Whether it gets there or not, we're going to look to try and take a little bit of juice out of this order. So let's just see how we react as we're slowly starting to get towards these highs here. We're trading 30.89s, 30.90s now. Potentially might go bid here. We've just gone bid on very little volume, trading 5 lots into the offer here. We've just gone bid there. We've just trading my offer. We've just gotten filled. We're going to get basically try and take the majority of our size off for about 1 tick, and then we're going to take out the rest of it, hopefully a little bit lower. We're going to scale that out to 5 and 5 here respectively. So we've taken out the 5, and now we're taking out the other 5 here at 30.90. So we've taken effectively 30 lot out for 1 tick, which is 75% of our size, and then we've taken out, the rest of that just in increments. Now we could try and trade that again. I would say usually these front runs, the more times they trade them, the less likely it would hold. If the market keeps going back to an area and testing it, whether there's size there or not, one market participant can't hold the market down. So let's see how we react when we get down to these 30, when we get back up to these 30.93s. We're now offered 20 lots instead of 40, so half the size that we did before. Let's see if we can get filled. As soon as we get filled, we're going to bid here at 30.92s. We've just been filled. We're bidding here 30.92. Let's see if we can get filled. We're not getting filled at the minute. We're not getting filled. That's just gone bid there. We've just taken that out at 30.94s, and we've just traded at 30.97. Now a little trick. Now we know there's buyers, there's sellers in the market that have been effectively front running him just as we have. Now we were fortunate enough to take out effectively a 2 tick loser on that. So we took a 2-tick loser on that 20 lot. Now what we're going to be looking for is actually, even though we're not necessarily bullish, from a price action perspective, we know that there was people that have bought this area here that have effectively bought these 3090, sold these 3093s, and now they might potentially still be short. So we're looking for them to potentially start covering some of their shorts as they're feeling a little bit uncomfortable here. So we've just gone filled on 20 at 3094s. Let's just see if we can get the other fill at 3093s, which we have. We've got very tight risk on this, possibly maybe 1 or 2 ticks. Now, if this bid here, 3092s, gets very small, I'm going to try and take that out. So we've just gone bid there. We take the first 10 out. We take the next 10 out. We've gotten pretty much 2 ticks. Well, 3 ticks out of the 3093s. That's us filled. It seems as if we've got a little bit more size to take care of. We've just taken 10 out there, and the next 10 out at 3095s. Now, that wasn't obviously executed to perfection, but what effectively was I just going through there? That's very, very much a micro scalping type opportunity. You know, we've gone through a lot of breakouts in some of these analysis videos. We've gone through quite a few different setups. But what are we looking for specifically in this type of setup? Well, for one, if we just note our levels, so we have the key level there where the offer was. So if we draw this out, where we were trading was somewhere below here. We had our big offer at 3094s of 1.5k lots. The market started moving towards that area. We had a bit of a reaction off there, and the market tried getting back up to this level and then pierced it. Now, effectively, when we get to this area, we know that not only us, but other traders are looking to sell in here. They're looking to sell just ahead of that level. Not because it's a level, but because someone's sitting there and offering resistance, so we can sell in front of him. You know, this is not illegal front running. We're not taking his order on its way to an exchange. It's at the exchange. I can see its order. We can trade off of that. That's his choice whether he doesn't want to cut his order up into 500 or 750 lot pieces. He's going sitting there at the offer for 1.5k lots. So I can technically sell in front of him. That's my prerogative. Now, we sold there. We were lucky enough, obviously, to try and take out the majority of our size just around this area. But now the market came back up to us. We sold again. Now, remember, not everyone is going to take out their position straight away. You know, there might be new sellers as we get back up here. So there might be new sellers plus old sellers. Now, what happens when this pierces through here? Effectively, when it pierces through here, we get a run of a few stops, but trust me, not everyone's going to stop out. Not everyone's that disciplined. So what we're looking for is when the market starts trickling back down to this area, we know that these people, this crowd in here, that have effectively sold it just ahead of that level, now, net, will have to start turning in to buyers around this area. So that's why we're looking for very, very small reaction off this level, right back up to this area, for them to cover and send the market, let's say, 1 or 2 ticks higher. Now, you know, I wouldn't necessarily say it works every single time. It does depend on the context of the market, how the market's trading within the technical structure. However, more often than not, if you see big orders and they go through them, you know, those reference points, those areas where big orders were sat in the market and potentially got took out, or people you saw there was front running taking place, those right there, so this whole area in here of that level becomes a very good reference point. You know, you can essentially say, okay, so long as we hold above there now, I know that the buyers are overwhelming that big seller. However, as you can see what happened later on, okay, yes, we did get the reaction. We moved through these 30.94s, came up, tested it, traded up just a little bit, just so managed to trade a few contracts at the high there. Then we got back below those 94s, and you can see we started covering back down. We're trading 30.88s. But in the very, very short term, just understand the psychology of how that setup works is important. Just understand that little concept, because you see these kind of things every day on the price ladder. You can see people taking positions. The market understands their hand once they get caught out, and then you have to play for their pain. Even if you got caught out and you took a loser, don't feel afraid to cut and reverse and take those one or two ticks, because you have to think in terms of what everyone else is currently positioned as. And if you can understand the current positioning, you have a huge advantage and a huge edge in the market. All right, so thank you guys very much for listening to this very short and sweet price ladder analysis video. Stay tuned for more, guys, and have a great rest of the trading week. Bye-bye for now. Does the price action on the buy side reflect absorption? That's way bigger than we expected. Way bigger. We're going to be buying in front of this 2001 here, 32.